Ladies and gentlemen, good day, and welcome to the Ratnamani Metals and Tubes Limited Q4 FY26 earnings call hosted by Monarch Networth Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sahil Sanghvi from Monarch Networth Capital. Thank you, and over to you, sir.
Thank you, Aldrich. Good evening to everyone. On behalf of Monarch Networth Capital, we welcome you all to the 4Q FY26 earnings conference call of Ratnamani Metals and Tubes. We are delighted to host the management of Ratnamani, and from their side, we have Mr. Manoj Sanghvi, the Chief Executive Officer, and Mr. Vimal Katta, the Chief Financial Officer. So without taking much time, I'll hand over the call to Mr. Manoj Sanghvi for opening remarks. Thank you, and over to you, sir.
Yeah, thank you, Sahil. Good evening, everyone. I warmly welcome you all, and thank you for joining us for our performance update for the quarter ended on 31st March 2026. The company operated in a challenging business environment during the quarter, with continued muted demand conditions and adverse geopolitical developments in the Middle East, impacting order booking, project execution, and overall market sentiments. Despite these headwinds, the company demonstrated strong operational resilience and successfully navigated the evolving situation. On standalone basis, our sales for Q4 stood at 893 crores as against the base of 1,575 crores in Q4 of the previous year, which was also the highest ever quarterly sales in the company's history. For the full year as well, standalone performance remained impacted by subdued demand conditions, impacting order inflows and resultant lower capacity utilization. The stainless steel division performed broadly in line with the previous year, while the decline in overall sales was primarily driven by lower volumes in carbon steel division. Despite lower volumes, our continued focus on operational efficiency, cost optimization, and improved product mix with higher value-added products ensured that there was no negative impact on the EBITDA margins in percentage terms, both for the quarter and for the year. We also continued to focus on expanding our market through new geographical areas and product application. During the year, company further strengthened its portfolio and manufacturing capabilities with 18-meter spiral welded pipes and expansion of API 5CT product range. I am also happy to share that company continues to remain debt-free on a standalone basis. The order book has continued to be around 2,000 crores during the previous year, and as on 1st May 2026 was around 2,160 crores, while export contributing around 700 crores, providing good revenue visibility for the coming periods. Now, moving on to our subsidiaries. Ravi Technoforge continued its strong presence and achieved a revenue of 105 crores during the quarter, representing a growth of 28% over corresponding quarter of last year. For the full year, revenue grew by 33% to 377 crores. Growth was driven by both exports and domestic markets, while EBITDA margins improved from 10% to 12% due to operational efficiencies. Our expansion projects at Ravi Technoforge are processing well and will further enhance capacity, automation, and precision capabilities. These upgrades will also help us step into new customer segments. Our subsidiary Ratnamani Fino Spooling Solutions also continued its strong momentum. The company achieved a revenue of 72 crores during the quarter, registering around 60% over the corresponding quarter of last year. FY26 was the first full year of operations for RFSS, during which it achieved a revenue of 390 crores. RFSS continues to witness healthy order inflows and improving execution efficiencies. The new manufacturing facility being set up by the company is progressing well and is expected to start contributing revenues from the second half of the current financial year. On consolidated basis, our Q4 sales stood at 1,085 crores as against 1,715 crores in the corresponding quarter of the previous year. For the full year, consolidated sales stood at 4,494 crores compared to 5,186 crores in FY25. At the consolidated level, the strong performance of Ravi Technoforge and RFSS significantly supported overall group profitability, with the bearing rings and pipe spooling business emerging as key growth drivers. Despite lower revenues, the group maintained profitability margin and absolute EBITDA and net profit broadly in line with the previous year. Based on the current year's performance, the future outlook, and the present challenging times, conservation of resources till things settle down, the board has decided to recommend a lower dividend of rupees 10 per share, which will still be 500% on the face value. Although order booking remained moderate during the quarter due to delayed project cycles arising from current global situation, inquiry levels have started showing signs of improvement across key markets. With expected improved demand visibility going forward, strong subsidiary momentum, contribution from ongoing expansion projects, and a positive long-term industry outlook, we remain confident of strengthening our market position and delivering sustainable growth in the years ahead. Thank you once again for your continued trust and confidence in the company. I'm happy to answer questions now. Thanks.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Dhananjay Bagrodia with Alchemy. Please go ahead. Dhananjay, please go ahead with your question and kindly unmute yourself in case if you are on mute. Since there is no response from the participant, we'll move to the next participant. The next question comes from the line of Shailesh Raja with 360 ONE Capital Market. Please go ahead.
Hello.
Yes, Shailesh, please go ahead.
Yeah. So there is excess capacity available in domestic stainless steel pipe industry, while demand also remains weak, which is getting reflected in our, the order backlog numbers. So historically, this segment has not witnessed meaningful pricing pressure, but the dynamics now, it is completely different. Almost every carbon steel company has entered into stainless steel space. So do you believe that there is a structural change underway in the profitability per metrics in stainless steel? And also, this is also very capital intensive business, which historically, if you see, it is a very good margins also. But if margins begin to decline structurally, where do you see the best deployment opportunity for Ratnamani? Incremental, for example, if we generate 100 rupees incremental cash flow, so how much we'll deploy it in HSA, bearing and pipe pooling business? Because if you see in the current capex cycle, we are spending only 50 crore pertaining to stainless steel out of 770 crores, the capacity that we are creating in India. So could you please talk about the stainless steel division?
So, just to correct give you the correct perspective. The stainless steel volumes in the last fiscal year actually went up, not down, but the prices were down, so we were more or less flattish on the revenue.
Okay.
Yeah. And yes, a lot of carbon steel players plus other players, the competition intensity in stainless steel or carbon steel is increasing. However, most of the capacity is for the pierced seamless products. So, which market as it is, Ratnamani is not catering to. So our still our focus remains on high value added extruded products, where only one new player is supposed to come. I don't know by when, but it will take some time before the new capacities in the extruded segment comes.
Okay.
Yeah.
So in the near future, is there any CapEx plan in stainless steel division, or our focus
Yes,
will be fully?
debottlenecking CapEx is going on. We are investing, we are already doing instrumentation tubes in straight length. Now we are executing a few orders in the coil form, and we will continue to increase the capacity over there. We are planning for a new tube mill on the welded side. Since it is all the capex put together is not significant, it is not, or it is part of our routine capex. So it is not highlighted separately.
Okay, sir. Sir, on the line pipe side, that opportunity appears very promising in both domestic as well as exports market. There are multiple pipeline projects being discussed in Saudi, including the sea pipeline opportunities from Middle East to India. So in addition, there could be a sizable opportunity in stainless steel in the Middle East if reconstruction activity gathers space. So ADNOC is also talking about doubling the exports. So how do you see the business opportunity evolving for us, both in stainless steel, carbon steel division for us over the next 1-2 years?
No, with the current situation internationally, definitely once this is over, we don't know today by when it will be over or by when things will be normal. But yes, definitely not only in Middle East, but domestic as well as other parts of the world, we will see a push in carbon steel pipes as well as stainless steel tubes and pipes, because refineries, petrochemical plants, whatever is damaged, plus the new expansion, once the oil is transported from, say, the point of originating to wherever it goes. So the refining capex, petrochemical plants also we will see capex, and we feel that yes, in 2 months, 3 months from now we'll see, if things normalize, we'll see the demand. Of course, many projects are announced, but detailed working of that will be done. So in another 3 months, 6 months, we will see those demand, those kind of demand for both stainless steel and carbon steel pipes coming in.
Yeah. Okay, sir. Thank you, sir. All the best.
Thank you.
The next question comes from the line of Divyansh Gupta with Latent PNS. Please go ahead.
Hi, sir. I have actually a question for each of the business verticals. Starting with the spool pipe business. So is the understanding correct that the spool pipe assembly that we give is more of a one time in the nuclear plant? And if yes, then the question is that how are we seeing the order book build out? Where is the order book? Where are the orders coming from? and what is giving us confidence to expand our capacity, given that even if someone says, "I want to do a nuclear plant today," the requirement of the pipe might come, let's say, 2 or 3 years down the line when the actual fitment of nut on bolt is expected to happen.
Yes, thank you. Your first question was whether it is a one-time requirement. No, it is not a one-time requirement. Now, and with the current situation globally, and amount of data centers being announced not only in India but elsewhere, the demand for power will go up. Only thermal or only renewable will not be able to suffice the future power requirement. Saying that, we feel that not only in India and with the vision of our Honorable Prime Minister by 2047, where he wants to have, say, 100 gigawatts of nuclear plant. Not only in India, but internationally also, a lot of nuclear power projects have been. So, us being at the moment the only nuclear approved facility from India for Nuclear Power Corporation of India Limited, plus internationally also now we've been approved to supply for projects in Egypt, Turkey, Hungary. So we see that there is good potential for RFSS to grow from here.
Got it. And when you say it is not a one-time product, so then let's say what frequency is the product replaced? The life of the spool pipe is, let's say.
So any nuclear power plant, greenfield, new project, say for 1 gigawatt, 4 to 5,000 tons of pipe spools are required. Now currently, considering what the number of plants India is planning, plus the other geographies what they are planning, this plant will be booked itself for the new nuclear power plants.
Got it. Understood. On RTL, the question was that what is the percentage of either exports or deemed exports, and does the tariff equalization now in the US brings any tailwind or any contracts which were delayed because of tariffs coming back on the discussion table, and how should we see the business ramp up happening?
So we have the data for physical exports, which is between 35 to 40% for Ravi Technoforge. Deemed export, we don't have the exact data, but 50% of what we supply to the domestic manufacturers, SKF, Schaeffler, or the other bearing manufacturers, I think 40 to 50% of that is exported by them.
Got it. So about 60%, 60 to 65 at least is getting exported.
Yes.
And
yes.
They get exported to, so yeah, the US tariff, and which geographies are they getting exported to?
Europe, US, also rest of the world.
And is there a broad mix that you can give on?
No. We would not have that data in detail, but our customers would definitely have. Yeah.
Understood. Coming to the Middle East plant that we were planning to set up, I see the date is still March of 2027. So if you can give updates on two aspects, does the current war has led to any delays or let's say reevaluation of timelines, and where are we currently after the initial certificate that we got or the approval that we got that okay, we can start doing the greenfield start doing the capex activities in Middle East?
Yes. So considering that things will normalize, say in another month or so, we still are confident that we'll be able to finish the project, especially the trials within March 2027. The current status, if I say the design and engineering is complete, it has been submitted to authorities for approval. Once it is approved, the contractor will be finalized for construction, and simultaneously will be ordering all the machinery. So
Sorry, continue.
Yes. So we are also waiting at the moment for things to normalize so we can award the contracts for construction. So as of now, we still remain confident that the project can be finished within March 2027. If there is any spillage, it can be of 3 months.
Got it. And coming to the standalone entity, which is the fourth business vertical, the order today, if you can split it between CS and SS. Second question is, given that, let's say, given the government financial are under strain, I'm guessing the Jal Jeevan Nigam is under stress, and similarly the oil and gas is also under strain. So what is the traction we are getting in CGD? Because at least the article says that CGD is seeing a lot of traction. And you mentioned that inquiries are coming. So where are these inquiries coming from, and any particular segment where we are seeing a lot of inquiries coming in?
On order book, Manoj, if you permit,
Yes.
I will just share. As on 1st May, it was 2,162 crores, out of which 531 crores was stainless steel and 1,631 crores was carbon steel. And out of this 2,162 crores, 697 was the export component. Okay.
Got it. Understood. And on the inquiry part, where are the inquiries coming from, and are we seeing any tailwind because of CGD?
So domestic, there are a few inquiries from gas transmission companies. Then there are a few inquiries on stainless steel from the refinery segment and the petrochemical segment. Some portion in the renewable energy segment. Also, if we see the thermal power segment, where our stainless steel products go for high pressure heater tubes and low pressure heater tubes plus the condenser tube. So we are seeing strong demand from there also. Oil and gas still, yes, Middle East we are hearing there are a few projects. However, they are going slow because still the shipping system or the shipping lines are not willing to, or even if they are willing to, the cost is too high. So once that normalizes, the real picture of demand from Middle East will know.
Understood. Thanks for answers. I'll join back the queue so that others can ask, and thank you.
Thank you. The next question comes from the line of Tanmay Agarwal with Niveshaay. Please go ahead.
Hello, am I audible?
Yes, you are.
Hello. Okay. Sir, my first question is, with 80 gigawatt thermal and renewable power capacity expected to be added over the next 4 to 5 years, could you help us to size the stainless steel opportunity both in volume and value terms? Specifically, what is approximate tonnage of stainless steel tubes required per gigawatt of addition capacity, and what share of this opportunity is Ratnamani positioned to address?
Can you repeat the first part because your voice was not very clear?
Sure, sir. With 80 gigawatt of thermal and renewable power capacity expected to be added over the next 4 to 5 years, could you help us to size the stainless steel tube opportunity both in volume and value terms?
I don't have the exact number at the moment, but for power plant, as I mentioned just before this question, that we are major suppliers for the heat exchangers, high pressure, low pressure, as well as the condenser tubes. So all put together, the volumes for the power segment is substantial, which before say 2025 or 2024, the power demand was quite less. our supplies to power demand the power sector had gone down. However, for the next 5 years, we feel and we see that the demand is going to remain quite strong in this segment.
Okay, sir. Sir, my another question is regarding Middle East and ONG demand. Sir, given the significant infrastructure destruction that had happened in the Middle East due to the ongoing conflicts, are you seeing any incremental inquiry or order inflow in the oil and gas segment, either from reconstruction activity or from the accelerated pipeline build-out?
Not yet. We have been hearing various projects. However, the actual demand or the actual inquiry is not yet seen. Two major factors. One, the shipping, because whatever orders we have, we are unable to ship still.
Okay.
Because only few ports we can ship to, and they are able to handle limited cargo. Plus the other ports where we want to send the material, however, the vessel is either charging, say, obnoxious amount, which the customer is not willing to accept. So until and unless things settle, of course, on paper, we see a lot of demand, but the actual demand on ground, we will only know once things settle down.
Okay, sir, sure. Thank you from my side.
Thank you.
The next question comes from the line of Netra Deshpande with Myre Asset Share Khan. Please go ahead.
Yeah, am I audible?
Yes, you are.
Yeah, thank you so much for the opportunity. To start with the about two questions which I have. Can you give me a breakup volume for the CS and SS pipe for the forward guidance and the realization per ton? And what would be any other like new product mix which is you are going to, any other plans for the capacity expansions and the new products mix which is going to be there for the further year? So this is my first question.
Yes.
So exact volume breakup for the revenue guidance, or you can say for the volume and sales for CS and SS.
Yeah. So, see, carbon steel, the volumes have gone down, considering that we were shifting some capacity the whole year, out of the whole year, 9-10 months, there was a shift of capacity from one location to another location. So during the year, if you see, we started production at Orissa. So that capacity is back up and running. Another modification, what we did in Kutch, where we used to manufacture pipes in the length of 12 meters. So now that plant is capable to manufacture pipes up to 18 meters. So we are back to our capacities, what it was before last financial year. And for stainless steel, there has been volume growth as indicated earlier. However, in the price terms, we are more or less, say, 5 to 10% higher than the previous year.
Okay. Okay. So realization would be for the FY27 would be, we can expect 5%, right?
Our budget for the year, say, is close to anywhere on standalone basis, anywhere between 4,800 to 5,000 crores.
Okay. Okay.
Yeah. Yeah.
And yeah, thank you, sir. And with my second question about, as we have seen in the balance sheet, we have maintained with the low debt and again the net cash. What would be the position for the, as like, I just would like to get the breakup of net cash position and what is the target for the further, as given with the capex cycle? What would be the further forward guidance for the, you can say the further debt level position for the next 2 years?
Yeah, we are working on 2-3 projects. So once those materialize, we will be able to give you the guidance on on the cash flows or the cash that the company has. At the moment, what is the amount available, Kataji, if you can please reply to that.
As on date also, we will be having close to 800 crores available as free cash with the company. And whatever little debt is getting reflected in the balance sheet, that is basically in case of any requirement. So we have FD facilities. So minor utilizations might be there. Otherwise, company is 100% debt-free as far as regular bank limits are concerned.
Okay. Okay. Thank you so much, sir. Thanks.
Thank you.
Thank you. All the best. Yeah.
The next question comes from the line of Saurabh Patwa with Quest Investment Management. Please go ahead.
Hello.
Please go ahead, Saurabh.
Ji.
Yeah, sir. Thanks a lot, sir, for giving this opportunity, sir. So just 2-3 questions. One is, so given this year you had some spillover, some delay in the dispatch of the products which you would already ready because of the export orders because of the Middle East issues, and the order book which you have, if this spills over and over time during the year, if these normalizes, so will this 4,800 to 5,000 crores of target which you have is including this, or is this for the current year's target and this can have a higher number?
No, it is the 4,800 crores. What we say is considering that things will normalize soon.
And last year's dispatches also will happen.
Last year we had, say, we were sitting on about 100 to 150 crores worth of material, which was about to be shipped, which could not be shipped because of this conflict.
Correct. And so secondly, this year we had a last 2 quarters, we are having close to 40% kind of decline in our volumes, despite a growth in stainless steel. So assuming this thing normalizes, we get some growth back and in this carbon steel, how will this impact margins? Because I believe stainless steel has much higher margins. So will your margins get impacted negatively?
No, the moment things normalizes, we will see a lot of projects, right?
Mm-hmm.
So we will get our share of margin of carbon steel product.
Okay. Okay.
Yeah.
So the current margins of carbon steel are depressed. Is this or like last year's carbon steel margins were slightly depressed compared to historical past?
Yes, but not, I would say not depressed, but the mix changed, right? Because a lot of it was water projects, not oil and gas.
Okay.
Now going forward, the demand for oil and gas and the Jal Jeevan Mission, both will be there.
Okay.
So if we manage the product mix well, definitely we'll be able to sustain the margins.
So we should be able to deliver 16 to 18% margins. This is fair understanding?
Basically, higher utilization of capacities will result into better absorption of fixed costs. So that negative impact of higher contribution coming from line pipes, carbon steel line pipes, will not be that significant. 1% here and there might be there. In the longer run, this 16 to 18% seems to be sustainable range.
Understood, sir. Understood. And so just lastly, was there any forex impact, positive or negative this year compared to last year? In this quarter specifically?
Forex, basically because exports have been significant, we have been positive on the receivable side. So positive impact has been there. That figure for the entire year will be closer to 45 CR.
Okay.
Yeah.
Okay, sir. Thanks a lot, sir, and all the best.
Thank you.
The next question comes from the line of Dhruv Saraf with Bowhead India Fund. Please go ahead.
Good afternoon, sir. Just wanted to understand, you've alluded to the fact that power demand for stainless steel tubes from the power sector remains to be very buoyant. Sir, but this is also a space where piercing technology is gaining wide acceptance. So do you see a situation where your margins in power will be lower than your margins that you earned in the past because of acceptance of piercing? Do you see that as a threat to you?
See, yes, I think it is echoing. Hello?
Yes, sir. Please go ahead.
Yeah. Yes, see, substantial capacities have been added in stainless steel seamless segment. Products are being accepted. If you say that, I would say yes, they are being accepted. But at the same time, we see failures also happening. Recent fire or heat exchanger failure at one of the refineries in Rajasthan was a major failure, and the tubes are to be replaced or is to be replaced in a month. So piercing technology, yes, it is accepted. Short term, maybe yes, margins. There will be a pressure. However, we continue to enter new segments like defense, which is increasing for us, aerospace, which is increasing for us. So we will move up the ladder. We'll try to that market in India is growing, so it's an opportunity for us. Yes, power, we might have a little compromise on the margins, but I think that phenomena may be temporary.
There might be eventually reluctance to accept piercing going forward, let's say 2-3 years down the line in heat exchanger tubes and power and refineries. Could there be like a rollback in that side? Or from piercing again back to...
Many end users have limited the tubes to be manufactured by extruded mother hollows. And there is... Hello? Yeah, and we see addition or the increase in number of such end users. That's all I can say.
Okay, so there's been an increase in the number of end users who have, restricted their demand to only extrusion. That's what you're saying, if I'm getting it.
For tubes, yes.
Okay, that will be very helpful. So just one more question on the export business, especially on stainless steel, sir. So Europe is coming with this carbon border adjustment mechanism later this year. And there is also some chatter about reducing the quota of Indian stainless steel exports to the continent. So do you think it's going to be a big game changer, either positively or negatively, for your export business, especially in stainless steel?
Short term, I don't see any major impact on us. See, finally, there has to be local manufacturing, or this is to support the local manufacturing. Now, the local manufacturing will also adjust the price accordingly. And if the demand is more than the supply, the price adjustment will happen itself. So short term, not a major impact, but yes, long term, if it continues, we will see local manufacturers expanding their capacities. And yes, that is where the impact can come.
Understood, sir. Understood. But that would be a 5, 6, 7 year phenomenon, but it's not more of a 2, 3 years.
Yes.
Sure. Understood. So thank you so much, sir. I'll get back with you.
Thank you.
The next question comes from the line of Deepak Sodhi with Sundaram Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yes,
you are.
Yeah, hi, sir. Sir, my first question is on pipes spools business. So if I look at this quarter, we are seeing a decline of 63% QOQ because the order book execution is a bit lumpy. But despite this, 63% sales decline on a QOQ basis, your margins has actually gone up by 3 to 4%. Right. So what explains this? Is it some inventory gain that we see in this pipe spooling business where our lower cost inventory went into production? Hence, we see an improvement in margin despite an 50-60% sales decline.
See, pipe spool business. Hello.
See, basically in Ratnamani, we don't have any pipe spool business. First thing. Second thing, all our orders are on fixed price basis, and inventory adjustment does not happen because of that, because inventory is marked against those orders. Only excess inventory is revalued at cost of market price, whichever is lower. So that portion is significant.
His question is about pipe spool business. So
Okay. But in pipe spool business, the volumes didn't go down. No? Yeah.
Yeah. So the pipe spool business volume did not go down. So yes, where did this?
Okay. So you are saying volume did not go down, but the realization went up exponentially higher.
Yes. See, operational efficiency coming in as the volume goes up. See, today we are prepared to manufacture a certain capacity. Now, as the utilization increases, the margins improvement you are seeing, and plus the nature of the order.
Okay. And so what is our, let's say, growth guidance for this business in FY27 and also margin guidance for pipe spool business?
For spool business, we can see a growth of 20%, 20-25% for this particular year.
And will you be able to maintain that 30-35% margin band?
At the moment, it seems like. However, going forward, I think the margins should be in the range of 20-25%.
Okay. And sir, one question I had on your standalone pipe business. So if I look at your order book in FY25 closing, we had good amount of export order as well as stainless steel order. But if I look at the current closing order book, which we ended in March, our stainless steel order book is down and our export order book is also down. So do you think that 16% to 17% margin can be maintained in FY27? I am aware that you did highlight that the mix within the carbon steel has changed from, let's say, water to more oil and gas. So but do you think that 16 to 17% margin can be maintained in 27?
Yes, margin say 16% plus minus 1%, definitely it can be maintained. However, if the conflict that we see today extends, say, beyond 3, 4, 5 months, then it will be totally different scenario.
Okay. And sir, when you say that 4,800 crore, is it something which you are internally factoring, or is that an aspiration number which we have, assuming everything comes back to normal?
It's assuming that everything will be back to normal in a month's time.
Okay. And sir, lastly, on Ravi Technoforge, I just wanted to know your thoughts, because in the opening remarks you said that, you're looking at new customer segment as your new capex comes into operation. So just wanted to understand, what kind of new customer segment are we exploring? And let's say in FY27, what is our growth and margin outlook for this Ravi Technoforge business?
So, same RTL this year, we can consider a growth of 10 to 15%. However, next year, when the new capacity which we are installing comes into play, then the new customer and the new segment of some auto parts is what we can cater to.
Okay. So we are toning down our guidance from 15 to 20% to 10 to 15% in 27, correct?
Yeah. 10 to 15%.
Okay. Thank you so much, sir. Very helpful. All the best.
Thank you.
The next question comes from the line of Parth Bhavsar with Investec India. Please go ahead.
Hi, sir. So thank you for the opportunity. Sir, my first question is related to the spooling business. What is the outstanding order book over here?
Current outstanding order book is
for spooling. Yeah.
I think it is close to 550 crores. Kataji,
Okay, so 550 crores. So, sir, basically what we are saying is 4,800 to 5,000 crores from the standalone business, 10 to 15% growth for Ravi Technoforge, and another 20% sort of 20-25% growth for Fino, right? Is that got it? Got it. And sir, just continuing previous participants' question, you said that margins would be stable, or you'll be able to hold it because your mix in carbon steel would be on the better side. But sir, it's still if you look at our order book outstanding for SS, it's quite lower, right? So on year-on-year basis, I'm assuming that carbon steel profitability per ton, or however we see it, it'll still be lower, right, versus CS. So that should have a bearing on our concern. That should have, versus SS, even though your CS share, both revenue and, even the mix goes up, but it'll still be lower than SS, right? Which should have a bearing on our EBITDA margin numbers.
Yes, but a lot of stainless steel projects are also under bidding. So we will continue to maintain that mix of order book, both for stainless steel as well as carbon steel.
Got it. And then, sir, what is our capex number for 27 and 28? Absolute number?
At the moment, on standalone basis, we have one capex, which is for Saudi. Yeah.
Cool.
Other than that, the routine capex items are, I think, 150 to 200 crores.
Okay. Got it. Perfect, sir. Thank you so much for answering my questions.
Thank you.
The next question comes from the line of Divyansh Gupta with Latent PMS. Please go ahead.
Hello. Hi, sir. The question was, does RTL also have an order book kind of a metric, or it's more?
They have a schedule kind of a metrics.
Got it.
Forecast, yearly forecast based on calendar year is submitted by the international customers, and domestic customers based on the financial year, they give the yearly forecast.
Got it. And this growth guidance for RTL that we have given, how much of it is, let's say, through forecast, or is there a delta, or how should we see the current forecast against the growth guidance? Is there a gap?
No, there is no gap against the forecast and our guidance.
But that implies that there is no incremental order when expected because of capacity constraint. Is that
we have a limited scope of increasing that a little bit.
Got it. Understood. And in the order book, what would be the exposure to the Jal Jeevan Mission or water segment?
At the moment, not much. I think all put together, say, Jal Jeevan Mission or not Jal Jeevan Mission, water all put together would be 300 to 400 crores.
Got it. And understood. And sir, on the spooling business, so the 550 crore order book that we have is expected to be, let's say, converted into revenue over what timeline?
So this year, about 500 crores will be, 480 to 500 crores is what we plan within this year.
Got it. Understood. And the last question on the spool pipes itself. So let's say if someone is setting up a nuclear plant, from a land acquisition to the actual, let's say, it going into supercritical or whatever, the plant going critical mode, right? At what stage does a EPC player, I'm guessing, places order with Ratnamani to say that I need X tons of spool pipes of this design and configuration, and how much is a lead time to design and deliver the pipes?
Yeah, once the land is acquired, I think anywhere between 1 to 1.5 years, pipe spools will be ordered.
Got it. And for us to manufacture and deliver, it would take how much time on an average? I know specs to specs, things can change, but...
So 4,000 to 5,000 tons every year, maybe 1,500 tons odd is what is required to be supplied.
No, I was asking from a timeline perspective. You got an order today, so you need to manufacture and deliver it in, let's say, 6 months, a year, or there is a whole schedule that, okay, give us.
It starts from 6 months and goes on up to 18 months maybe in this.
Got it. So that implies that our 550 crore of order book is basically at more or less like a fag end of the order pipeline, right? Because 550 order book, 500 is expected to be done within this year.
Yes.
So what is the active pipeline of orders that we have either being nominated or being discussed, under negotiation or under bidding? And
So
what is our typical
total bidding right now is close to $400-500 million. How much we will get, we will only be able to say when the time comes.
Got it. And I'm guessing there's no historical past win rate that we can refer given the newness of the business. Got it. Understood. Yeah, that's it from my side. Thank you.
Thank you.
The next question comes from the line of Dhruv Saraf with Bowhead India Fund. Please go ahead.
So just wanted to check, in your FY24 annual report, you had mentioned that the export business was roughly 40% of the stainless steel business. So what would be the rough ballpark figure now, if you don't want to give specific numbers?
Export of stainless steel division. Hello?
Yes, sir. I'm talking about the export business in stainless steel.
Yeah, so it varies between 35 to 40% of our volumes.
Of your volumes. Okay, sir. So just one more follow-up on the carbon steel business. You've repeatedly highlighted that oil and gas capex in the country has been weak. But sir, if I were to just look at, let's say, the number of CGD connections that have been rolled out, which I can see from the PNGRB website, that seems to paint a different picture compared to what we've been speaking about. So can you help me reconcile the difference? Is it a different sector within oil and gas you're speaking about, or is it something that I'm missing? So can you help me understand this?
No, so what is the question? That the CGD numbers are going up and
yet, somehow, it's not trickling down to line pipe demand for us. So I'm just not being able to tie both the situations.
No, so pipe procurement is the first phase for any CGD operator. So whatever was procured, say from 21 to 24, you would see those connections going up because of that network.
Understood. Okay. And so the recent government ruling that has come out about, accelerating the CGD rollout, can that lead to, front loading of a lot of demand in this space for us over the next, let's say, 12 months?
Yes, all the CGD operators have been, by the government, have been informed to increase the network. But of course, again, there are private players, viability, and at this steel price and the capex cycle, whether it is viable or not, those studies will go on, yes. But eventually, once everything settles, yes, the demand for CGD also will go up.
Okay, sir. And when you talk about CGD, it would be mostly, let's say, ERW, or would it also be HSAW also for the long distance pipeline?
No, mostly ERW pipes.
Okay. Sure. That is helpful. Thank you so much.
The next question comes from the line of Saurabh Patwa with Quest Investment Management. Please go ahead.
Hello. Yes, sir. So thanks a lot for giving this follow-up opportunity. So just two things quickly, sir. One is that this 4,800 kind of a target which you have, this is for the standalone business, it's for the entire company?
It's on standalone basis.
Okay. And this is on the basis of the current pricing, or is that like you already build in the orders which you have? Some of these would actually have the raw material price increases already there. How do you plan to cope up with that, sir? Do you have those levers with you to increase the pricing in some of these cases?
No. So for orders, whatever we have, say raw material is already tied up. We don't,
Okay.
our orders are mostly back-to-back.
Okay. And this this target which you have includes basis the current pricing for the
Yes.
assuming you get the incremental orders
It
this
is
prices.
considering, yeah, the current price.
Okay. Okay. Great, sir. Thanks a lot, sir. All the best.
Thank you.
Thank you. The next question comes from the line of Sonal with Prescient Capital. Please go ahead.
Hi, sir. This is Sonal Minhas. I hope I'm audible.
Yes, you are.
Sir, my question is again with regard to the guidance for the standalone business. When you compare it to your standalone numbers for this year and then see the guidance, it means roughly more than 25% growth in the standalone business, basically. So just want to double-click and understand what gives us the confidence when our order book compared to same time last year is a little lower. If there is anything significant in terms of wins, order accretion, which you can talk about to help us understand basically this. That's all.
So there are two things. One, the capacity which was not available, which was being shifted from one location to another location, is now operational in this year. So one sector of growth or one scope of growth is from that particular capacity.
Okay.
So we are going to, if we see, we are going to reach back to what we were a year back.
Got it, sir. And the demand remains the same as a year back? Basically, that is what also the assumption is there.
Yes. At the moment, with whatever announcements we see, definitely the third and fourth quarter seems to be quite promising. However, as indicated earlier, we hope that things settle down in next month or so.
Got it. Got it, sir. That's it from my side. Thank you.
Thank you.
A reminder to all participants, you may press star and one to ask a question. The next question comes from the line of Parth Bhavsar with Investec India. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, just one question. How are we exposed with the gas supply? Like what percentage of cost has been increased and how are the supplies currently?
Increase has been substantial. So yes, the cost part has gone up. Supplies currently still not an issue.
And this would only hit your carbon and steel pipe side of business, right?
Some part of stainless steel also, because we have some heat treatment furnaces working on gas.
Right. Okay. So, sir, what percentage would it be like in terms of total cost on standalone or whatever, like if whatever you can help me with the cost increase?
That number offhand.
Okay. Okay. No worries, sir.
Yeah.
Thank you.
Thank you.
Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Sahil Sanghvi for the closing remarks.
I just wanted to thank all the participants for joining the call, and also thank you, management, for very patiently answering all the questions. Manoj sir, any closing remarks from your side?
Yeah, just a thank you message to everyone for participating. In case if you have any further questions, you can reach out to us. Thanks. Bye.
Thank you. Thank you, everybody.
Thank you, sir. Ladies and gentlemen, on behalf of Monarch Networth Capital Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.